Now, when we talk about our relationship in current price to current support and resistance, what we mean is where is current price in relation to the next overhead resistance, and where is current price in relation to the next support below. And when we look here, we see that we're right in the middle. And what that tells us is that if support is way down here, even if we think price is going to go up and hit resistance here, we don't want to go long here because our risk is all the way down here at support. See, we've already moved up too far to think about a long trade here. And once we've moved this far, that means we've missed the boat, and we are better off looking for a turn and reversal back down and bounce back down off of current resistance, because that would give us a better level and we could get in closer to a support resistance level. And if we got in on a turn here below here, then we could place our stop above here, and as you can see, as opposed to trying to go long here. Now we would consider going long if we got a bounce back up off of here and we could get in pretty close to here. But if we can't get in within at least say 20-30 pips of here, it's gone a bit too far to try to get a long in. But now even though we are in the middle of the range between support here and resistance here, at the current time we are in the process of testing resistance. Now you may say, how are we in the process of testing resistance when resistance is way up here? Well, you see this bar that made the high. You look at the bar that made the actual high and look at the length of that bar. The full length of that bar is the resistance bar, and if we take a look, we can see that we touched and we closed below this bar. Okay, so this is our range of resistance from the low of this bar that made the high all the way up to the top. So we're looking for a turn anywhere below here, and if we're above here, we're looking for a turn up here. And in the same way that on the way down, this bar here, this is the support bar, so the entire range of this bar would be support. So support would be the range from the top of the bar to the low of the bar. So just based on what we know now about the established support and resistance levels and our current relationship to it, we already know a couple of things before we even go any further. We already know we definitely are not considering any long trades. Okay, so that eliminates long trades right away. But we also know it's time to put this pair on our focus list or our hot list, because we have or are currently in the process of testing overhead resistance. And if it's going to turn and head back down, it's going to turn within the range of overhead resistance. And as we've already mentioned, that our safest trade is going to be looking for a short trade. And in any event, you only want to go short at a resistance level, and you only want to go long at a support level, and this is how your thinking should be. If your thinking is along these lines, then it will automatically incorporate that concept into your trading without you really having to think about it. And now that we understand our current relation to support and resistance, now knowing that gives us an indication on where we should be looking for our bias, our trading bias, our directional trading bias, up or down. and it also gives us an indication of where we will be looking to enter. And the next thing we need to do, our third step, we need to determine the strength of the market. Is the market strong or is it weak? Because the market can be moving up and still be displaying weakness, in the same way that a market can be moving down and yet still be displaying strength. And so next we'll talk about the strength and weakness of the market, and that is our third thing we want to establish when we're doing our analysis.